Hello and welcome to Blythe Ray Business News. Today I'm joined by Jaco Prinsloo, who is Chief Executive of Sylvania Platinum. Sylvania listed in London on the AIM market and a market capitalisation of around £187 million. Jaco, welcome back on the programme. You've just released your final full year results. Please give us a quick overview, first of all, of the operational highlights.
Thank you, Tim, and thanks again for the opportunity to share our results with you. Yes, I'm extremely proud of our production results for the period. Our operations have managed to produce a record annual production of 75,500 4E ounces for the year, or nearly 96,000 ounces 6E for comparative purposes to our peers in the industry, which is a very strong production performance and a really good testament of the guys' efforts throughout the year. We managed to achieve this stronger production. It's about 13% up from the previous financial year, and particularly enabled by stronger throughput rates on the operations. Lesedi in particular, having improved their production stability after the previous year's tailings-related interruptions, and then Tweefontein that posted record performance during the year, where the management really focused on improving plant running times and stability. The other factor contributing to the higher ounces is a 5% improvement in recovery potential. Now that is significant. Besides all of our plants having higher recovery efficiencies for the year, our MF2, which is secondary milling and flotation programs roll out at specifically Lesedi and Tweefontein during the year, have also significantly assisted to deliver enhanced recovery efficiencies, and that was what the project was aimed at doing. So we're very satisfied with the performance of those. And these higher ounces come despite a slightly lower PGM feed grade. We've dropped about 5% year on year on the feed grade because of the combination of feed sources we are currently treating, but nevertheless a strong operational performance. So very proud of the guys, and we look forward to building on that momentum in the next year.
So a very pleasing operational performance. Now let's look at the numbers. How have the finances gone this year?
Yes, I think from a finance perspective, it's been a bit more of a challenging year, where we have seen a significant decline in the PGM basket price for the year, where it's the 4E basket price declined about 28% compared to the previous financial period, and primarily driven by about a 32% decline in rhodium and 14% decline in palladium prices, which largely related to slower than anticipated recovery in the automotive sector for internal combustion engines, where these metals are used as autocatalysts. And as we all know, it's largely geopolitical factors across the globe impacting on that. It's outside our control. However, despite this price environment, I'm very proud that we could focus on the aspects that we are able to control, like the strong production we mentioned earlier, and then also lowering our cash unit cost for the year by about 12%, which is very positive. And that enabled us then to still post positive EBITDA of about $66 million for the period, and also about 17 pence per share earnings. Although these figures are about 20% lower than the corresponding year, the previous year, it's still encouraging, and especially on the back of the 28% basket price decline that I've mentioned. I think very positive as well for us from a financial perspective is that we've been able to declare 8 pence dividend per share for the financial year, maintaining the dividend level of the previous financial year, the full year dividend. And maybe just to be clear, that is there was a final dividend of 5 pence to be paid in December of this year, following on from the 3 pence interim dividend paid earlier in the year in April. And then I think also in addition to the dividend distributed to shareholders also gained from the benefit of a share buyback throughout the year, where we purchased about 4.8 million shares during the financial year. And I think after all of our share buybacks, the interim dividend being paid and funding our capital prospects, we still maintained a cash balance of about 124 million rand, $124 million for the period at the end of June.
Okay, so great on the operational, good on the finances. As a producing mining company, I know you've embedded the ESG principles into your culture, into your operations. Give us a quick overview of what's happening on the ESG front this year?
Okay. Yeah, and I think as our investors would know, ESG is very close to their heart and a critical focus area for the company. And I mean, it's not just important for us to post strong production and financial results, but it is equally important to do so safely and responsibly in terms of the ESG framework. And from that aspect, I believe we have a very good track record in ESG. Of particular interest during the past years, maybe focusing a bit on our safety performance. We've had only 2 lost time injuries across 6 operations for the financial year. Our Doornbos operation have achieved an industry-leading 11 years lost time injury-free just in June, which is an excellent performance. And across our 6 operations, since inception of our first operation in 2007, our Sylvania dump operations have been fatality-free, which I think is a very positive impact from that. Other areas from ESG point of view that we have focused on during the year is an improvement in our water balances and consumption on our operations, a significant amount of training and development initiatives with our surrounding communities, as well as an initial gap analysis and external audit we have initiated on our tailings dam management in line with the global industry standard on tailings dam management, which is a global standard indicating to us how we're doing, and we are have an action plan in terms of that as an annual exercise. And then finally, we will, as we've done last year with our first initial standalone ESG report, will issue a dedicated ESG report alongside our annual report in this financial year.
Also in the year, you've done a joint venture with Thaba. Tell us how that fits into the entire, the overall growth strategy for Sylvania.
Yeah, Tim, that's a very exciting development for us, and I think certainly one of the highlights of the year, what we've been able to achieve. The Thaba joint venture is one of those growth opportunities where we are able to replicate our skills and expertise of what we've already been doing on our Sylvania dump operations for a number of years now, by extending that same philosophy and business model to external resources outside our current host mines. And it is particularly exciting for a number of reasons. The first one is, as I mentioned now, just our current host mines. This diversify our operating portfolio away just from depending on a single host mine. The second point is that we're also diversifying our revenue stream, because according to this JV, we will also share in the profits from the sale of chrome material, chrome concentrate, on top of the PGM concentrates. So we diversify a project stream, and then also it is establish a footprint on the northern part of the western limb in the Bushveld complex, where this would be the first plant of its nature in the area that also would position us nicely for opportunities in the future and can unlock further potential going forward. Just some of the metrics on the JV is our initial term is a 10-year minimum operation, although the mining right is for a longer period, and we have access to extending the period according to the agreement. But we will be producing about 13,000 ounces of 4 PGMs per year and about 400,000 tons of chromite concentrate per year, of which 50% would be attributable to Sylvania. I mean, and if you take the 200,000 tons attributable chrome concentrate against the current market prices, it can add about another $30 to $32 million a year to the revenue stream for Sylvania. So certainly significant. And I think through this model, we have also unlocked now the potential and for further opportunities in the industry, which we would very much explore going forward.
So very good performance from the core business with the PGMs, an exciting JV which now takes you into the world of chromium. You have got other assets with some exploration going on. Is there much to report on those?
Yes. So I think the big progress in terms of our exploration assets, and maybe just again to recap, the owned exploration assets that we do have are on the northern limb of the Bushveld complex in South Africa, and that is our Volspruit project, and then our far northern limb projects, the Aurora and Accra opportunities. And we have published significant progress during October last year, but I mean, we have covered that and announced that to the market. But that entailed updated mineral resource estimate and a scoping study on our Volspruit project, which at that stage only focused on the northern pit, which constitutes about 58% of the total volume of the project area. And we have subsequently focused our efforts on including the south pit, which is the other part of the project, as well as including rhodium that was not historically included in the assessment because of the level of or integrity of the data at the time, but we have now progressed at this stage so that we can declare an updated mineral resource estimate, hopefully in the next quarter, and then towards the end of this calendar year to also update a scoping study on Volspruit. On Aurora, we have published last year just the a updated mineral resource estimate, focusing initially only on the La Pucella area, which constitute about 12% of our overall 14-kilometer strike length on that project. And although the results were quite exciting, we believed that we needed to prove the continuity of the mineralization across the strike length and then update our mineral resource estimate for the combined project before progressing that further to a scoping study. And that's what we will be continuing during this next financial year on achieving that for the entire strike length. And then Hacra, being the last one, is our most northern project, bordering our neighbors of the Waterberg project from Platinum Group Metals, where that's a deep underground resource, about 400 meters below surface. And there we've just published exploration results. And work during the past year has been focusing to see, can we declare a maiden resource estimate on it? And we hopefully will have the answer to that in the next couple of months or the quarter. So yeah, overall progress on all our exploration assets, but nothing material to announce at this stage.
All right. So we've covered the full year results. We've looked back at the preceding year. Let's look forward a little bit. What should viewers, what should investors, what should potential investors be looking out for in the next few months? What's the big news items we should look out for?
Look, I think of crucial importance is that we maintain our production profiles and profitability. As I mentioned, it is a tough price environment at the moment, although most analysts forecast it to improve in this next 6 months. But we certainly focusing on maintaining strong production performance from our current operations, and the commissioning of the Lennox MF2 will be key in that. And we would look at producing about between 74 to 75,000 ounces again this year as outlook from our current operations. Then obviously, now that the Taba deal is announced, we are focusing strongly on the execution of the project. Our project teams have made significant progress already in terms of the detailed design of the project, and we're looking to place first commercial orders or procurement orders in the next 3 to 6 weeks. And in order to progress and ensure that we can deliver this project for starting to produce ounces in about 18 months time period. So that would be a strong project. And then in the light of just having concluded this Taba JV agreement, we also focusing on similar growth opportunities, especially on the eastern limb, where we have a number of chrome tailings resources where we have gained exclusive access with third parties, and we currently negotiating final terms to ensure we can progress those projects as well. And hopefully, we can have some exciting news in the next 6 months or so to inform shareholders of where we're progressing with those. And the exploration projects I've mentioned, where we're going to. And then in the end of the day, I think is focusing on having a robust business model, running a tight ship, maintaining our cost focus in the tight price environment, continue to focus on returning our value for our shareholders. I think we've managed to build our reputation as a cash generative, value returning business that the shareholders can trust. And equally, I think, and we're seeing it with increasing amount of opportunities coming our way from third parties, we have also, through our robust performance, our track record, our ethics and expertise, have also established ourselves as the partner of choice on growth opportunities. So I'm very excited about the prospects in this next financial year and with everything that we are busy with at Sylvania at the moment.
Well, it sounds like plenty of news flow coming up, Jaco. You must come back and keep us updated. Thank you for joining us today. Okay. That was Jaco Prinsloo, Chief Executive of Sylvania Platinum, giving us a very full roundup of his annual results, which have just been announced. That's it from this edition of Blythe Business News. Thanks for watching.